So we've made 2 acquisitions. We've added about 160 units to our portfolio in Q1. We're still in acquisition mode, not in a hurry, never in a hurry. Don't buy properties just to buy them. Find the right deals. In the manufactured housing space, all the on-market stuff is way overpriced, I think. And you've got sellers that have brokers in their ears and they have misaligned expectations on pricing. The last 3 mobile home parks we acquired, Q4 and Q1, across 3 communities across those 2 quarters, were off-market deals. 2 of them were seller finance deals. And so there's a lot to be said in the manufactured housing space, to go off-market, to go direct to the seller. Mitch, who's not on, is really good at finding those. So, and do you remember like in the 2019, 18, 20, you could buy parks at 10 caps all over the place. That was like the standard. And that's changed a lot. There's been a lot of demand for investors in that asset class. That was 3 communities. 1 community was off market. It was a broker that we have purchased assets from in the past. And he was actually just driving by this mobile home park every day. He lives close by, and he finally saw the seller out there walking from door to door collecting cash rent. Older guy, stopped in, talked to him. And the guy's like, yeah, I inherited the park. It was pretty beat up, but a good tenant base, good consistent tenant base. His mantra was, I'm the cheapest guy in town, $180 a pad in a market that's $450. So we saw a lot of upside there with some capital to be injected and then raising rents over time. So he actually we always stay in touch with this broker. And so he reached out to us and 2 other groups, and we were really interested in it. Ran the numbers and realized that it was an okay deal. I mean, we weren't buying on a great cap because rents were so low, but we knew that there was at least $200 up in rent after you invest capital in. And so we structured an owner finance deal. He wanted to have a certain amount of income per month. And so we backed into a loan amortization schedule with him and a 15-year am. So we're paying down principal pretty fast, but still the debt service is cheap because we're getting the park for like $17K a pad. And so, we just went in. There was a wastewater treatment plant, which we normally aren't big fans of, but we did our research, got comfortable with that. Came in with a lot of capital, bought it at a really great entry point, and immediately fixed all the roads, put bus shelter in for the kids, the school bus shelter, lighting, did some other things. And then we did a relatively aggressive rent raise, but we always put capital in. And that one, we bought for like 1.1. It's going to be worth $3 million after our next rent raise north. So a lot of good upside there. Again, off-market deals doesn't necessarily mean you call the seller directly. This was just a broker that we maintain a relationship with. A lot of sellers that want to sell don't want to go public with that. And so he just he wanted the annuity stream. He wanted out of managing the asset, and we saw a huge opportunity. The next deal was Mitch cold called and built a rapport with a guy, an older 85-year-old guy that's exiting his portfolio. So we bought that 80-pad park in Indiana. And then the last one was actually Coast, who's asset manages and operates all of our entire community. Their CPA had a guy that approached him and said, I want to sell my park. And so that, again, was an off-market deal. And that last one, the second one that we did in Indiana was bank financing. We got like 6.1% debt, pretty good. 2 years of interest only, good upside on rents. But that last one, again, was an owner finance deal.
Still, it's all relationship. It's all relationship based. And I think I just want to point that out. Like a lot of people think it's, these deals are just going to fall in your lap. And it may feel that way when you have these connections, but I think people need to start by making those connections, building those relationships. You said it's our asset manager CPA. It was a cold call, which I know Mitch didn't just call up and say, hey, sell me your park. And the next day it was in contract. That probably took some, massaging and warming up to, right? And then it was literally one of your brokers that drove by a park every day. And then he saw somebody out there and you guys were on top of mind because you were clients. And so I can never we say relationships. And I've said it so many times, like every deal I can trace back to a conversation or relationship. And you just illustrated like three different deals that all came from a relationship in some way. I like to say the transactional part of real estate is actually the easier part, right? Like the number that usually works or it doesn't, or you can be creative and make it work or not. But the relationship piece is the piece that people often overlook and don't put as much importance to. And I think that's actually probably the most important thing in real estate is building relationships and connections. No one's going to bring you a deal if they don't know you're looking. No one's going to bring you a deal in a certain area or a certain asset class if they don't know that you're the buyer. And no one's surely going to sell or finance you a deal or create some, great opportunity for you if you don't know the problem that they have that you're trying to solve for.
And relationship building is a long-term thing. I mean, even two of these sellers, they still have other parks they want to sell maybe next year. So, just because the deal's done doesn't mean you don't maintain those relationships with these people. And so, yeah, you're right. It was all relationship based and it's all proximity and just being active. Activity generates results. So, and then if you get a deal and you're looking at a deal, maybe you're in contract or maybe you're negotiating, like you said, then deals can be made better. Through creative financing, seller carry, maybe adjusting the price down, et cetera.